Hello dear students, I Professor Aagam Dalal on behalf of JK Shah classes welcomes you all. Now this all videos are drafted for CA Inter Direct Text subject which will be applicable for November 21 attempt. In all the videos of all the chapters which are applicable to you, we will be recording only those important topics which are to be referred on the last day of the exams. Point to be noted, we are not going to do each and every topic. We are going to do each and every important topics. But let me make you very much assured, from all these videos, maximum coverage of the entire syllabus will be done in a very shorter span of time. Now the very first chapter that we are going to do without wastage of a single minute of yours, and that is chapter number 1, basic concepts, which can come into the examination for 3 to 6 marks. Now here there are so many theories. I will not be covering all the theories. What I will be covering is the important aspect. Now the very first thing, how government has the power to make any law. To be very precise, how the government has the power to make Income Tax Act. Article 246 of the Constitution. In that there are 3 lists: union list, state list, concurrent list. Union list, the power is with central government. State list, the power is with state government. Concurrent list, the power for both. In the union list, there is one entry number 83, and that entry gives the power to collect the tax on income other than agricultural income to the central government, and that's why under section 10 clause 1 of the Income Tax Act 1961, agricultural income is exempted. Means if in the MCQ or in one liner any question is coming that from where Income Tax Act has came from, the answer should be article 246, union list, entry number 83. Now, what are the steps that we regularly follow in each and every year to calculate the income tax for any assessee? First of all, computation of the total income. In that computation of total income, the first step that we will be doing is determination of residential status, whether a person is resident or non-resident. That is the second video of mine. After determining the residential status, what we will be doing is, we will be classifying our income in 5 different heads. There are 5 heads of income. Number 1, income from salaries. Number 2, income from house property. Number 3, which we call as PGBP, that is profit and gain from business or profession. Then capital gain. Number 5, income from other sources. After that, sometimes we apply clubbing, that is section 60 to section 64. Wherein income is of any other person, but it will be clubbed in your hands and you will be taxable for that. Now when all these cases will be there, it will be discussed in a separate video. After that, sometimes it may be possible that let's say there is a loss in one particular head and there is a income in a different head. We have to sometimes nullify both the effect and we have to set off the loss to the other head. And if the loss is in excess of the income, we have to carry forward the loss to the subsequent year. That is called as what? Set off, carry forward. After doing all this adjustment, what a single figure we will be reaching out is gross total income, that is GTI. But that is not the income on which we will be calculating the tax. From gross total income, we will deduct deductions under chapter 6A, section 80C to 80U. After deducting this deduction, what we get is our total income. Now, point to be noted is, as per section 4 of Income Tax Act 1961, that is charging section, income tax is payable by every person on his total income which he has earned in previous year relevant to assessment years. That means the income tax which we calculate as per section 4, whether it is to be calculated on gross total income, no, it is to be calculated on total income. On total income, we will be applying the basic tax which is at the applicable rates. Now remember, the rate of taxes which are a slab rate or a general rate, not a special rate, but general rate of taxes are mentioned under Finance Act. For you people, which Finance Act is applicable? For you people, Finance Act 2020 is applicable, which is regarding previous year 2021, assessment year 21-22, which I am discussing later on. So whatever you will get from this rate of taxes, that is called as basic tax. Now sometimes for a rich person, surcharge is to be added, and sometimes for a person who is having lower income, rebate is to be deducted. After adding or deducting surcharge or rebate, we have to compulsory add 4% health and education cess, and from that Finally, we will be deducting advance tax and TDS which government has already collected from us. The balance will be called as either tax payable or tax refundable. Now, this process we have to follow each and every year to calculate our income tax. Now, as per section 2 clause 31, what is called as person? Because I just said section 4 charging section is saying that income tax is payable by every person. So, we have to know who is called as person under Income Tax Act 1961. Section 2 clause 31. Number 1, individual, a human being. Number 2, HUF, Hindu undivided family, the main person called as Karta, co-partners. Two type of HUF is there, Dayabaga school of thoughts, Mitakshari school of thoughts. Dayabaga, which is applicable to West Bengal and Assam, Mitakshari applicable to the whole of India, that is the rest of India. Then firm is also a person, partnership firm, not a proprietary firm. If it is a proprietary firm, it will always be included in the word individual. If it is partnership firm, whether unlimited liability or LLP, both will be covered over here in the name of firm. Then company. Company may be domestic company, foreign company, whether registered in India or registered outside India. Then AOP, BOI, association of person and body of individual. Then local authority, municipal corporations and all. And last, every artificial judicial person, that is AJP. For example, SEBI, RBI, all these authorities which are formed by government is called as what? Artificial judicial person. Point to be noted is they have not included state government and central government in the definition of person. Then previous year and assessment year. Now remember, section 2 clause 34 says previous year means the year which is defined in section 3 and the further definition is given under section 3. Means if you want to write the definition number, section number of the word previous year, you can either write section 2 clause 34 or section 3, both are valid. Now, in short, we will be calling this as PY. See, one thing is very much clear that in the year in which you are earning the income, you cannot pay the tax in that year itself. You cannot calculate the income in that year itself. You cannot file the return of income in that year itself. So, the very first year, you will be earning the income. And the very succeeding year, you will be calculating that income, calculating the tax, filing return of income. So, the year in which you are earning the income will be called as previous year. The year in which you will be doing the calculation is called as assessment year. So, previous year means immediately preceding the assessment year. Generally, previous year means the financial year in which you will earn the income. For you people, in the examination, which previous year is applicable? 2021. For that which assessment year is applicable? Assessment year 21-22. And which Finance Act is applicable? Finance Act 2020. Remember, generally previous year, assessment year, both are of 12 months. But there is a small exception so far as previous year is concerned. If you are going to start a new business, if you are going to start a new profession, you are going to start earning the income for the very first time in your life, then for you, business or profession, the date on which you commence that, or for the person who is earning the income for the very first time, the date on which you have earned the income for the very first time, that is the date from which your previous year will start and not from 1st April. Means generally previous year will be from 1st April to 31st March. But let's say I am starting my business for the very first time on 1st October 20, then for me, the previous year will be 1st October 20 to 31st March 21. It will obviously end on 31st March itself. Remember one point that for you, assessment year is always of 12 months. Even though previous year is for 1 month, still assessment year always of 12 months. That is the next succeeding whole 12 month. So previous year can be lower than 12 month, assessment year can never be lower than 12 month. Assessment year defined under section 2 clause 9, it is the period of full 12 month from 1st April to 31st March. And as you know, it is the succeeding year of previous year. In this, the income is assessed, the tax is assessed and the return of income is filed. Now, coming directly to the rate of taxes which are applicable in your attempt, means whatever income you will earn in previous year 2021, which you will calculate in assessment year 21-22, which rate of taxes are to be applied. Now, the very first thing which is applicable is for those persons who are either individual or HUF or AOP or BOI or AJP. The full form I have laid down above itself. If you are individual, HUF, AOP, BOI, AJP, to you, fixed rate of tax is not applicable. There is not one single rate. There are slab rates which you have to apply. In this also I have prepared 3 columns. The first column is for a resident individual below age of 60 or any kind of HUF, AJP, AOP, BOI or any kind of non-resident individual. Point to be noted, if a resident individual is aged 60 or more, he will be not covered under the first column, he will be covered under either second or third column. However, if a non-resident is there, even though aged 100 years, he will be covered over here only. He will not be covered under any of this other column. Now for all this which I laid down just now, that is resident individual below 60 plus HUF, AOP, BOI, AJP plus non-resident individual, up to 2,50,000 there will be no tax. Means whatever is your total income, up to 2,50,000 of the income, we won't levy any kind of tax, and that's why this 2,50,000 limit is called as basic exemption limit, because while calculating the tax, up to that income the tax is exempted. Now once your income is going above 2,50,000, from 250 till 5 lakh, 5% rate is applied. From 5 lakh to 10 lakh, 20% is there, and above 10 lakh, 30% rate is applied. So if my total income is, let's say, 6 lakh rupees, up to 5 lakh, it will be, up to 2,50,000, the tax will be 0. 250 to 5 lakh, I have to apply 5%, that is 2,50,000, the difference, multiply by 5%, 12,500. Plus 5 lakh to 6 lakh, what is the difference? 1 lakh. On that 20%, that will be 20,000. My basic tax will be 32,500, on which I have to apply 4% as later on. So up to 250, 0, 250 to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, above 10 lakh, 30%. But if you are a resident individual age 60 or more, then you will be called as a person senior citizen. For senior citizen, the basic exemption limit will be for rupees 3 lakh instead of 250. Means up to 3 lakh there will be no tax. 3 lakh to 5 lakh 5%, 5 lakh to 10 lakh 20%, above 10 lakh 30%. That is as usual only. Means the only change over here is what? Basic exemption limit instead of 250. For a resident senior citizen, it will be rupees 3 lakh. Now once you touch 60 at any time during the previous year, let's say your birthday is on 31st March 21. For a single day, you turned 60. Still you will get the higher basic exemption limit of rupees 3 lakh for the entire year. But this particular point of rupees 3 lakh is not applicable to HUF, AOP, BOI, AJP. It is not applicable to any non-resident individual. It is applicable only to resident individual aged 60 or more. But let's say your age is 80 or more, you will be called as very senior citizen. The basic exemption limit will be up to rupees 5 lakh, there will be no tax. But then directly 5 lakh to 10 lakh 20%, above 10 lakh 30%. Now I have given one example over here. Mr. Aagam, let's say 24 years. If nothing is said in the exam, assume the person as resident and assume below 60. Though I have given the age over here, but you have to assume resident and below 60. Let's say my total income is rupees 30 lakh. Then how to calculate the tax? See, you can prepare, if the tax payable is there in your examination, you can prepare in a table format also, you can prepare in a chart format also, that is totally okay. Up to 2,50,000, 0. 250 to 5 lakh, I have to apply 5%, which will be 12,500. The difference multiply by 5%. Then 5 lakh to 10 lakh, the rate will be 20%. The difference is 5 lakh, multiply by 20%, that will be 1 lakh. Above 10 lakh, how much income is there? 20 lakh. 10 lakh to 30 lakh, that will be what? 20 lakh. On that I have to apply how much? 30%, that will be rupees 6 lakh. Do the total of all, the basic tax will be 7 lakh 12,500. On that compulsory you have to add 4% health and education cess. Remember, this 4% cess is not on the total income, it is on the basic tax. On basic tax, add 4% health and education cess, which will be 7,12,500 into 4%, 28,500. And sometimes you have to apply the round off. When you have to apply the round off, I will tell you later on. Here, no round off is applicable, and that's why tax payable is 7,41,000. So on the total income of 30 lakh, you are applying 7,41,000 rupees of tax by applying the slab rates. Now let's say some other person is there, Mr. A, 95 years, 7 lakh, nothing is said, so the person is resident. As you can see over here, he is a person who is resident, aged 80 or more. He will be called as very senior citizen. Up to 5 lakh rupees of income, there will be no tax. So here 7 lakh rupees is the total income. Up to 5 lakh, there will be no tax. 5 lakh to 7 lakh, you have to apply 20%. That will be 40,000. On that, apply 4% health and education cess. The total tax payable will be 41,600. Now, if the same person is non-resident, then see, if the same person is non-resident, the age is irrelevant. For a non-resident, always the limit will be what? 2,50,000. So up to 250, no tax. 250 to 5 lakh, 5%, which will be 12,500. 5 lakh to 7 lakh, 20%, which will be 40,000. Add that both. Total basic tax 50 to 500 plus 4% says 54,600. As you can see over here, if a person with the same age, with the same income, if resident, tax will be 41,600. If non-resident, tax will be 54,600. Then there is a section over here, 115 BAC. In detail, I will teach you this section in the chapter called total income, not as of now. But many a times, whenever this section will come into the picture, I will give you the reference of that so that you can correlate both the things. See, whatever slab rate we have studied up to now, it is still applicable for previous year 2021. But in the last budget, our finance minister has given one option to individual and HUF. The option is given only to two persons, individual and HUF, not to others. What our finance minister said, instead of following the earlier slab rate, you can go for the new slab rate, which are up to 250 no tax, 250 to 5 lakh 5%, 5 lakh to 750 10%, 750 to 10 lakh 15%, 10 lakh to 12 lakh 50,000 20%, 1250 to 15 lakh 25, above 15 lakh 30%. No need to worry about it. Just increase the slab by 2 lakh 50,000 and just increase the tax rate by 5%. Stop when you come to 15 lakh. So, sir, any person is whether mad that he will follow the old slab rate. Obviously, the person will follow the new slab rate. No, it is not like that. If you want to follow the new slab rate, while calculating the total income, many of the deductions, many of the exemptions you cannot claim. You have to forgo. So, each year what we have to do now? First, we have to calculate the income as per the normal provision, apply the old slab rate. Then calculate the income as per the new provision by, not deducting some of the exemption deductions and calculate as per the new slab rate. And see where your tax is coming lowest. That will be the option that you are choosing. However, there are so many other points also in this. Who can apply this every year? Who can apply once in the lifetime and all? This all the provisions we will be learning in detail in total income chapter. This was just for your knowledge that there is an optional tax system also, which we called as optional tax regime. Section 115 BAC, which is applicable only to whom? Individual and HUF. Now that was basic tax about individual, HUF, AOP, BOI, AJP. Now if I am discussing about firm, LLP and local authority, there is no slab rate. Whatever is your total income, directly apply 30% and on that basic tax, add 4% health and education cess. That's it. There is no slab rate. So if your total income is 10 rupees, then also 30%, 10 crore, then also 30% fix. But if you are a cooperative society, see, cooperative society is basically covered under AOP, BOI. However, for cooperative society, a different slab rate is applicable. Up to 10,000, 10%. 10,000 to 20,000, 20%, above 20,000 on the entire income, 30%. These are the slab rates which are applicable for a cooperative society. This is not the flat rate. This is what? Slab rate. If you are a company, for a company, you have to see whether you are a domestic company or you are a foreign company. If you are a foreign company, but obviously we will be charging you the higher tax, and that's why 40% is the rate of tax for you. But if you are a domestic company, the tax rate which will be applicable to you will be 30%. However, we have to see what is the turnover of this domestic company in the last to last year. In previous year 18-19, because for us which previous year is applicable? 2021. If in previous year 18-19 your turnover was less than or equal to 400 crore, you are a small company, 30% rate won't be applicable. For you only 25% is applicable. Now here please note, turnover to be seen on previous year 18-19, less than or equal to 400 crore. If that year turnover is less than or equal to 400 crore, then in 2021 the tax rate of a domestic company will be 25%, otherwise 30%. This 25% rate of concession is not applicable to a foreign company, it is only applicable to a domestic company. Now this was all about basic tax, which is applicable to each and every person. Now after calculating the basic tax, I just said in the structure, sometimes you have to add surcharge, sometimes you have to deduct rebate. Now rebate is given under section 87A, rebate which we can say as discount also. Now understand, rebate is applicable only if you are a resident individual. The concept of rebate is not applicable to any other person, any non-resident, any HUF, no. Rebate is only applicable if you are a resident individual. Plus, your total income does not exceed rupees 5 lakh. It is less than or equal to rupees 5 lakh. Then you will get rebate from your basic tax. That is, before adding health and education cess, we will give you a discount from your basic tax. And what is the rebate? It is 12,500 maximum or basic tax, whichever is lower. Basic tax or 12,500, whichever is lower. That is, maximum discount you can get is 12,500 per year, maximum. So sir, can't we say that for a resident individual, the basic exemption limit is now 5 lakh? No. Because if your total income is, let's say, more than 5 lakh, the rebate concept itself not applicable. Then you have to calculate tax just like what we have just calculated. But if your total income is up to 5 lakh, first you have to calculate basic tax as per that slab rate. And from that basic tax you are deducting rebate. For example, resident individual income is 4,60,000. Can I say the person is resident? He is individual. The total income is less than or equal to 5 lakh. Yes, concept of rebate is applicable. But you cannot say that directly tax payable will be zero. Nah. First, you have to calculate the basic tax. In the income of 4,60,000, what will be the basic tax? Age not given, so less than 60. Up to 250, 0. 250 to 5 lakh, 5%. So here 250 to 4,60,000, apply the rate of 5%. The basic tax will be coming to you is 10,500. But can I say all the condition of section 87A is fulfilled? And yes, rebate will be applicable over here. What is the rebate? Basic tax or 12,500, whichever is lower. Over here 10,500 is the discount which you will get. The tax payable will be 0. So health and education says, to add 4% in 0, you will get 0 itself. That means first you have to deduct rebate and then you have to add 4% health and education cess. But if the same person would have been non-resident, then we would have not deducted the rebate. What we would have done? 10,500 basic tax plus 4% health and education cess. That would have been our answer. Means for a non-resident, for a HUF, for a company, blah blah blah, rebate concept is not applicable. So government has given a huge discount to a resident individual who has income less than or equal to 5 lakh. Basically, they want to encourage the people who will give them vote, the middle class people. And we can say that win-win situation, they are also winning the votes, we are also winning the tax amount. So basically, the resident individual having the income up to 5 lakh will get the rebate. But because of this, can I say the treasury of government will not be fulfilled much? They will get the loss in the treasury, they will get the loss in the revenue. And that's why what they decided in the year 2014, then amendment year to year. We are giving the discount to some of the resident individual who is having lower income. Against that, we will be collecting more tax from the rich people. But then they can be any person, resident, non-resident individual, HUF, etc., etc. We will be collecting more tax from rich person. And they are called as what? Surcharge concept. This concept is called as surcharge. Surcharge is applicable also on the basic tax. So the rate of surcharge will not be applied on total income. It will be applied on what? Basic tax. And then whatever tax is coming, we will be adding 4% health and education cess to that. However, when surcharge is applicable, it depends on your total income. If you are individual HUF, AOP, BOI, AJP, individual can be resident, non-resident, senior citizen, very senior citizen, all are covered. If your total income is up to 50 lakh, mind well, there is no surcharge. If your total income is more than 50 lakh but up to rupees 1 crore, then 10% surcharge, means on your basic tax you have to apply 10%. If your total income is from 1 crore to 2 crore, then 15%. Point to be noted, exactly 1 crore, 10%. Exactly 2 crore, 15%. More than 2 crore, up to 5 crore, 25%. If your total income is more than 5 crore, determine your basic tax. On that, apply directly 37% surcharge. Now, what brackets I have written over here? That I have written that 25 and 37% wala surcharge is not applicable on dividend income, short-term capital gain under section 111A and long-term capital gain under section 112A. How this is implied, what this means, I will be teaching in capital gain chapter. So as of now, you can ignore this bracket. Refer capital gain chapter, ending tax rate point for this two scenario. Now, how the surcharge is actually applicable? Let's say my total income is now 63 lakh. So first of all, you are not supposed to think about rebate. First of all, you are not supposed to think about surcharge. Think about basic tax. How to calculate tax on 63 lakh? See, let me tell you a very short memory point. If a person is normal resident person below 60 years, up to 10 lakh, the tax will be 1,12,500. Because 250 to 5 lakh 5%, 5 lakh to 10 lakh 20%, 1,12,500. Then see how much is the income above 10 lakh. In this case, 53 lakh above 10 lakh. On that directly apply 30%. That will be 15 lakh 90,000. Do the total of all. The total basic tax 7 lakh 2,500. Now see here rebate is never applicable because the total income is more than 5 lakh. However, the total income is more than 50 lakh up to 1 crore. Surcharge will be applicable at the rate of 10%. So on 17 lakh 2,500, I will be adding 10% surcharge, that is 1,70,250. And on that whatever tax is coming, I will add on the whole of that tax 4% health and education cess. So the tax payable will be what? 19,47,660. This is after surcharge concept. Now if you are a firm LLP, that is limited liability partnership, or a local authority, then the surcharge rate will be, if your total income is more than 1 crore, the surcharge will be 12%. So in case of a firm, basic tax 30%, total income more than 1 crore up to any income, then surcharge rate 12%. After all that, 4% health and education cess. However, if you are a company, we have to see whether you are a domestic company or you are a foreign company. If you are a domestic company, what is the basic tax rate that is applicable? 30%. And if your previous year 18-19 turnover is less than or equal to 400 crore, then 25%. But what about the surcharge? If your total income is more than 1 crore but less than or equal to 10 crore, then surcharge 7%. If total income more than 10 crore, on the basic tax, the surcharge will be 12%. If you are a foreign company, we are already charging you 40% basic tax. We cannot apply the same rate of surcharge. Otherwise, you will not do any business only over here. And that's why for a foreign company, surcharge 1 crore to 10 crore total income, then only 2%. Above 10 crore, then 5%. Because their basic tax rate is very high. That's why the surcharge rate is comparatively low. Now, for you people, you can understand that inter-CA, individual will be on a higher side. Firm, company, they will be majoritarily asking you in the final CA syllabus. Now, I just said about rounding off. There are two sections, 288A, 288B, round off. 288A says you have to round off your total income. 288B says you have to round off your tax payable. The last digit of the answer should always be 0. For example, my total income is coming to 5,33,234. I cannot calculate the tax on this income. I have to calculate the tax on 5,33,230. I have round off that. But if my tax payable comes to 5 lakh, total income comes to 5,33,235, then now I will round off as 533,240. Means if the last digit is not 0, but it is below 5, then lower side round off. If it is 5 or more, upper side round off. And you have to make it compulsorily 0. To whom you will round off? Number 1, total income. Number 2, tax payable. Now, whenever surcharge is applicable, one more concept can get applied, and that is marginal relief. Now, the concept of marginal relief is applicable only if surcharge is applicable. If surcharge is not applicable, marginal relief also not applicable. Now, what is marginal relief? See, I have given one very simple example over here, and as you have studied each and everything, I'm not supposed to teach you each and everything, I'm just supposed to show you how it works. Let's say, my total income is exactly rupees 50 lakh. Can I say on the income of rupees 50 lakh, if I'm an individual, surcharge won't get applicable? Because it is applicable only if the total income is exceeding 50 lakh. Let's say my total income is exactly 50 lakh. Then what will be the tax payable? It is only the basic tax, 13,12,500 before health and education cess. Now let's say my total income is 51 lakh. Can I say it is more than 50 lakh? So now 10% surcharge will be applicable. That means my basic tax will be 13,42,500 on 51 lakh. On 13,42,500 I have to apply 10% surcharge. So before health and education cess, my tax will come to 14,76,750. As you can compare over here, my total income has increased just by rupees 1 lakh, but against that, my tax before health and education cess has increased by rupees 164,250. Why it happened? Because surcharge is applicable. Now here, there is an injustice. On increase of income of rupees 1 lakh, you have to pay tax which is more than earlier tax for 164,250. How much extra tax you are paying? 64,250. This is called as marginal relief. This marginal relief is to be deducted from your final tax payable. What is your final tax payable? 1476,750. From that I will deduct 64,250. The balance will be my tax. On that add 4% health and education cess. Now understand, marginal relief will not apply in each and every case of surcharge. It will only apply when your total income is very nearer to the threshold limit. Threshold means 50 lakh, 1 crore, 2 crore, 5 crore. If your total income is very near, let's say 51 lakh, 52 lakh, 53 lakh. For 1 crore it may be up to 1 crore 10 lakh. For 2 crore it may be 2 crore 15 lakh, like that. Then you have to check the concept of marginal relief. Otherwise it is totally okay. So when I can say marginal relief is applicable? When because of difference of income, there is a difference of tax, and the difference of tax is more than difference of income, the excess difference is called as marginal relief. I hope you understood. When due to difference of income, difference of tax is there, that extra difference of tax is called as marginal relief. I have prepared one formula. Marginal relief means what? First of all, calculate basic tax plus surcharge of the tax, if applicable. Then deduct whatever is the tax payable before health and education cess on the nearest lower side threshold. From that you deduct difference of income. That, let's say in my example 51 lakh and 50 lakh. So difference is 1 lakh. If answer is coming to positive, that is marginal relief. Answer coming to negative, there is no marginal relief. Ignore that. Are you understanding this, people? Yes or no? This can come in MCQ majority times. So in the first chapter, there are so many other theories also. Some of the theories we will be covering in the later on chapters, different IFOS capital gain like chapter. The rest of the theory, they are not supposed to be done on the last day. Again, I am saying this, these videos are meant for the quick revision of each and every syllabus on a very thoroughly basis. So it is not to cover each and every topic in detail. It is to be covering each and every things in a revision manners, which are important things, important topics. So that was the very first chapter, basic concepts, that is the introduction to income tax for you. The very next video will be on residential status and scope of income, that is chapter number 2. Thank you so much.